In this video, I'm going to help you guys go from being an unprofitable IFVG trader to a profitable IFVG trader. So we're going to go over a few tips and tricks that allowed me personally to become a profitable IFVG trader in only 8 months of knowing how to trade. So the first reason I see some people failing with the inverse fair value gap model is because they see this tiny rejection off of this tiny fair value gap. And as well as that, they see some sort of momentum going through these bullish fair value gaps. So they decide to get in here with their stop loss being a candle closure back above. And they decide to move stops to break even at this low. And instead, what happens is we don't even hit that point and that you just immediately get wrecked right back through this fair value gap. The main reason that this happens is because look at the price action before it. If you wake up and market opens at 9:30 and for the first 20-25 minutes, we have snaky price action like this where there's a bunch of wicks and we have no real direction. It's just sideways pattern, like sideways action. Automatically, that's going to lower the probability of any setup. So in that case, just move to an eval account or go to a paper trading account because you do not want to trade in this price action or after this price action. Another reason I see IFVG traders not being profitable yet is because they'll see something like this and they'll immediately take it thinking that this is a solid setup. And then the very next candle you get destroyed, right? The main reason is if you compare this FVG right here to this one right here, this one sticks out to you, right? This one stands out to you and it's a normal size compared to the rest of the candles. Look at how tiny this fair value gap is. It's not significant enough in the market where the market's going to want to do something with it. And on top of that, we're in the middle of nowhere. We're in snaky price action, like I said in the previous example. And on top of that, we aren't rejecting off of any fair value gaps. We aren't reacting off of any low. We aren't doing anything. We're just in the middle of nowhere in a range, and you do not want to take that. This isn't necessarily something that gives people unprofitability, but this is definitely like a little tip that that would give you a higher win rate, right? So as we can see, you got to incorporate other time frames as well. Like here, we're bouncing off this 5-minute fair value gap. But in this leg, we have two 1-minute fair value gaps, right? When instead of waiting for these two to get ran through, you can try to find a time frame where there's only one fair value gap in that leg. So for example, if we go to the 2-minute in this example, we only have one fair value gap. Look at how much cleaner this looks. Instead of having to wait for both of these to get inversed, you get so much better probability if you wait for the time frame that only has one fair value gap in the leg to get inversed. And then if we play out the tape, you can see that here you can move stops to break even or just take your full position there. And just overall, you're not going to necessarily lose because of the fact that there's two fair value gaps in a leg. But it makes price action look a lot cleaner and your probability increases if you wait for the one that has one singular fair value gap in the leg to be inversed. Now we're going to go over two examples of A+ setups that I took personally. All of this has been posted in my Discord, by the way. If you're interested, link in the description. I don't charge monthly. It's just a one-time fee. So here we bounced off this volume imbalance, and on the higher time frame, we had a bigger fair value gap. On top of that, look at the reaction we had from this low. We had a singular fair value gap like we just talked about in the previous example that got ran through with good momentum. We had a clear position to be able to go break even. We had a nice drawn liquidity being data highs, and we had a nice place to set our TP, our first TP. And here's our final example. So this one plays in perfectly with all the tips that I gave previously as to why a lot of IFVG traders are unprofitable. So on the 1-minute, we had a nice reaction off of taking a high. And on top of that, when we go to the 2-minute, we had a nice reaction off this bearish gap. If you see on the 2-minute, I didn't have this drawn. Like I didn't draw the fair value gap perfectly. And the reason for that was I wanted to show my students what I was previously talking about. So this on the 1-minute, there were two fair value gaps in that leg, right? So what I did was I went and tried to find the time frame where there's only one fair value gap in that leg. In this case, it was a 2-minute. Look at the momentum we got right through this 2-minute fair value gap. A lot of people try to overcomplicate trading when in reality, trading is super simple as long as you have a clear mindset. Don't revenge trade, don't overtrade. Just have the mindset of one and done. If you take a loss, it is what it is. The market is full of probabilities as long as you know that everything you did was in your rule set. So like I mentioned, we got really good momentum through this fair value gap. In your head, if you don't have a light bulb that says, hey, this is an A+ setup after we took that high and had a nice reaction and bounced off this fair value gap and had a clear draw on liquidity, then you just have to go back and start back testing. You should have this light bulb that pretty much lights up in your head the second you see an A+ setup. You shouldn't go out to look for an A+ setup. Instead, they should just be coming to you. I really appreciate you guys watching this video. I just started this YouTube channel, and as well as that, I also started an Instagram account to help struggling IFVG traders become profitable. I've only been trading for 8 months and I've picked up on this really quickly. So I started up a Discord. Like I said previously, it's only a one-time fee. I don't charge monthly. I'll leave the link in the description for anybody that's interested in joining, or you can just learn for free off of my YouTube channel. But like I said, thank you guys for watching, and I'll see you guys in the next video.